Welcome to Live Better Longer. I'm your host, Bill Borton. It's hard to believe it's been 53 years ago this week since Pete Townsend and Roger Daltrey sang, "I hope I die before I get old," talking about my generation. 53 years ago, 1965, that song was released and became a big hit that propelled The Who on to stardom. Now, here we are today, and about 78 million baby boomers, including yours truly, are still here. And I don't like to use the word old, but I talk about chronological advancement. And you know, most of we boomers are doing that and will continue to do that. And most of us are going to continue to live well beyond our current ages. Incidentally, Pete Townsend's 74, Roger Daltrey 75, and they're still touring. So talk about retirement. It's a little bit different these days than it used to be. You don't retire at age 65 and get a watch and a pension anymore. So this week, I'm going to go it alone again and put my teacher's hat on to help you better understand a very important issue. Millions of Americans have a huge hole in their retirement plan, the lack of a long-term care plan, and it puts their retirement income and their legacy at risk. November is Long-Term Care Awareness Month, and for a good reason. Later in the month, Thanksgiving, many families will come across the country or across town to get together and talk about really important things like the weather, sports, politics, dead Aunt Sadie, and oh, maybe, just maybe, this will be the year they start talking about what mom and dad are going to do when they can't live in the house anymore. See, most people don't have a long-term care plan, and that is a problem. So what I want to do, though, is suggest to you that today I'm going to share with you what long-term care planning is really all about. So let me ask you this. When you think of long-term care, what do you think of? Nursing homes, insurance salesmen, premiums that can go up, all sorts of fun stuff. No wonder nobody wants to talk about it. I'd like to think that it's about aging in place with dignity and enabling your family to grow older with you without having to take care of you. So having a plan is really important. So today's agenda, with the help of my producer, we're going to understand the key issues related to long-term care. We're going to know what it is and what it costs. We're going to discuss ways to pay for care. We're going to determine when to begin the long-term care planning process. We're going to understand the components of a long-term care plan and the parties involved. And we're going to help you determine if self-funding is a viable option. Beyond that, we're going to discuss the benefits of insurance and what kinds are available, and understand ways that insurance can be funded. So, Mr. Producer, can we see the first slide? So, long-term care is not about nursing homes and insurance policies. It's about assistance with the activities of everyday life. And it's custodial care, not medical care. Where you receive long-term care and what it costs is different depending on the care setting. As you can see, a home health aide costs almost $70,000 a year if they're working for you 7 days a week for 8 hours a day. Assisted living facilities are almost $64,000 a year. Nursing home private room is up to $146,000 a year. What about inflation? Nursing home inflation is about 5%, home health care is about 2%, but again, at 3%, costs double in 25 years. So if you're 65 now, in 25 years, now you're at that age where being frail or cognitively impaired could mean that you might need care, and just imagine what the cost would be in dollars alone. Next slide, Mr. Producer. So, how can you pay for long-term care? Well, health insurance, like you have for your employer, doesn't pay. Medicare doesn't pay. Medicaid does, but first you got to be broke. You can use your own income if you have enough. Some people think somehow their family's going to take care of it. Is that really fair or viable? Have you talked to them about it? And insurance, yeah, it'll pay, but you got to be insurable and you got to be able to pay for it. So, Mr. Producer, I appreciate your help there. We're going to come back in a moment. But let's talk a little bit more about ways that you can determine when to begin the long-term care planning process. As I said before, Thanksgiving is a good time, but if the family's going to be in town, you may not want to do it over the dinner table. Otherwise, you could end up with a food fight. But perhaps on Friday, instead of going out shopping and beating the crowds, trying to beat the crowds to the mall for Black Friday, maybe it's a time to sit down and talk among the family to think about what you can do for mom and dad, and maybe even the boomers, the adult children at this point, and see where you can go from there. So let's talk about the next steps in the planning process. Mr. Producer, the next slide, please. So, what are your chances of needing long-term care? Well, this is one of the reasons why a lot of people don't want to talk about it. Well, many people have heard the quote, there are lies, there are damn lies, and then there are statistics from Mark Twain. But it's not about the risks of needing care. It's about the consequences to your family, the consequences to your finance, the consequences to your legacy. So when we think about this, men tend to be risk-oriented, women tend to be more consequence-driven. So the consequences to your family can be really dire. How often have you seen your children or your siblings agree on anything? Just imagine when it comes time to figure out where mom or dad should be cared for, or who's going to be the primary decision maker or caregiver. These things don't bring families together, they can tear them apart. May I have the next slide, Mr. Producer? So, when should you begin I can talk today, sure I can. When should I begin the planning process? Well, I always like to say when you're age 50, or when you're no longer paying for children, or when you're thinking about retirement, or perhaps in the aftermath of having been a caregiver. Why age 50? Insurance is cheaper, easier to get, and affords you the most leverage. Thank you, Mr. Producer. So, when you understand when you should begin the planning process, then you need to understand what the components of a long-term care plan are and who's involved. May I have the next slide, please, Mr. Producer? So, the long-term care plan and how you create one begins with having the conversation. I always talk about the conversation. The conversation can be between you and your spouse, you and your parents, you and your children, you and your financial advisor or your attorney or your accountant, but at some point in time, you need to put a stake in the ground and have the conversation. Then, information gathering. You can't plan for something if you don't know what the different variables and factors are. You need to gather financial statements. You need to understand what Social Security benefits will be available depending on when you claim Social Security. You need to know about any insurance policies that already exist and whether they're still worth keeping. Then you need to talk about obtaining or reviewing and possibly updating legal documents. Having appropriate wills and trusts are certainly important, but also powers of attorney. Healthcare power of attorney, or a durable power of attorney so that possibly an adult child can make decisions for your care or for your finances if you're no longer able to. And then, of course, an advance directive or living will is important so that if you no longer want to be around and you can't communicate that, then again, one of your adult children can help the caregivers, the medical profession, understand that it's time for mom or dad to go. Then you need to determine what the funding arrangements will be. Are you going to self-fund the plan? Are you going to spend down your assets and qualify for Medicaid? Or are you going to buy insurance? Next, you need to take all of this that you've done, the conversation, your wishes, your preferences. Do I want to age in place at home? Do I want to stay there and maybe possibly make modifications with a stair climber or a ramp to get in and out the door? Or do I want to plan on going to an assisted living facility? Or maybe after I die, my wife will want to go to an assisted living facility. This all needs to be put in writing. It doesn't have to be a legal document. You need to talk about how you're going to pay for care. You need to tell your family members and your advisors what your plans are, where your legal documents are, and what arrangements you've made to pay for care. And if you have insurance, where the policies are, and how to get in touch with the insurance companies to file claims. Then communicate the plan to all parties involved. Give a copy of your plan. It can be a one-page Word document to your accountant, your attorney, your financial advisor, and to your family members. May I have the next slide, Mr. Producer? So, Funding the plan. A lot of people talk about self-insuring. What they really mean is self-funding. Self-funding a plan requires you to have enough money. Well, do you know? How do you know? Understand that assets don't pay for care. Income pays for care. Look at your current income, not just your net worth. When people need long-term care, particularly if there's a spouse present still, you don't see a need for less income. You may need double the income that you're currently receiving at that time. How will you determine that? Well, again, if you've planned in advance what the care setting is going to be, what the costs are currently, and then you fast forward them to a reasonable point in time, such as when maybe you're age 80 or 85, and adjust them for inflation, then you need to know how much income will be needed at that time. Then you need to consider your funding sources. Again, Social Security, any pensions there might be. Perhaps you might be planning on tapping home equity through a home equity conversion mortgage, or long-term care insurance, or possibly annuities. Again, where's the money going to come from? What about the tax consequences if you're going to self-fund? If most of your money is tied up in qualified plans like your IRA, you're going to have to pay tax on that money and then give it to the home health care agency or the nursing home. When you think you've got it all figured out, double check your assumptions. Run them by your advisor or your accountant just to make sure that your math is correct. And then if you really truly believe you have enough to be able to convert assets to additional income, establish a dedicated account, because you can only spend the money once. Thank you, Mr. Producer. So then we now know whether we can self-fund or not, and a lot of boomers who thought they could because their financial advisor said they could, maybe they realized that self-funding is not the right option. Maybe insurance does make sense. Well, how are we going to make that determination? We need to understand what kinds of insurance are available, how they work, and how you pay for them. Next slide, please, Mr. Producer. So, insurance should be considered, even if you have a lot of money, to protect your wealth or your legacy, allow for instant liquidity, understand that there may be possible tax benefits such as deductibility of the premium, and of course qualified plans are always tax-free when you receive the money to pay for care. It allows for a high level of care, and again, you help avoid being a burden on your family. If you're self-funding a plan and your family's got to write the checks, they don't feel so good about writing those huge checks every month to pay for your care. Next slide, please. So there's a lot of different kinds of insurance available. Most people think of traditional standalone policies. These provide the most leverage if you need care. And what I mean by the most leverage is the amount of benefits you could receive versus the amount of premiums that you've paid. Reasons why people don't like these policies is, what if I ever need the coverage? And I've spent all this money. This is where they say, if I don't use it, I'll lose it. Also, you have to pay the premiums every year for your lifetime, and those premiums can increase. We've all heard the horror stories about people that bought policies 10, 15, 20 years ago and have been hit with big rate increases because the policies were not priced properly. There's also life insurance now with living benefits. There's a lot of insurance companies that are offering policies that have chronic illness or long-term care riders. They tend to fall into two categories, 101G or chronic illness, 7702B or long-term care riders. It's important that you know the difference. Some 101G riders really mimic long-term care and others don't. Also, the benefits that are going to be cash indemnity benefits, where you can use the money for anything you want once you've qualified for care, or are they only going to reimburse qualified care from a licensed caregiver? Hybrids, also known as linked benefit policies, are attractive alternatives to self-funding because they're usually funded with one big single premium and they're fully guaranteed. So if you live and need long-term care, they pay a significant multiple on your premium. If you die and never need care, your beneficiary is going to receive a reasonable step up or return on that big investment. Or if you decide you want your money back after a period of time, you can usually get all or most of your money back. Here again, these are available in cash indemnity from a couple of companies and reimbursement from a number of other ones. Annuities could be used for care, particularly for people who are less insurable or possibly even uninsurable. They provide limited leverage, there's a much higher degree of self-funding, but they're easier to get from an insurance company. So, Mr. Producer, I thank you for all the exhibits. I appreciate you, my audience, for your time and attention. This video will be available on the RVN TV website. It will also be available through my YouTube channel. And I want to make sure that anybody who wants to better understand long-term care planning and insurance coming into Long-Term Care Awareness Month will have a place to go. I'm perfectly happy to have a conversation with you or you and your spouse. And anybody who makes an appointment with me during Long-Term Care Awareness Month will get a copy of Rewiring the Way You Think About Retirement Planning by my friend and colleague, Jamie Hopkins, a professor of retirement planning at the American College. I want to thank you all very much for your time and attention. This is Bill Borton. I'll be back next Tuesday on RVN TV with more Live Better Longer. Have a happy Thanksgiving.